What are the three advantages that retail investors have over professional investors or fund managers? Number one is the mandate itself. A professional investor is bound by the mandate, meaning they cannot invest wherever they want. Like this particular, they've decided at the start that we'll only invest in bigger companies like market cap of 1 billion and above, for example, or they will only invest in particular geographies or particular sectors or particular styles. And that's where the retail investor has an advantage because they can decide to go wherever they want, wherever the opportunity or attractiveness of a particular stock or a particular geography is. The second advantage that retail investors have is liquidity. So especially if you're a salaried employee, you're going to have more and more and more savings coming in each and every month, which means that you can put more money into the stock market gradually. You don't have to worry about like pulling money from your portfolio unless there's an emergency event. Whereas a professional investor is always going to be concerned about liquidity because if they don't perform, for example, investors are going to get uncomfortable and they're going to start pulling funds from those accounts. So that's where they're a bit worried about liquidity, and that's where retail investors have an advantage. The third is volatility. So volatility of returns, which means your month-on-month performance, quarter-on-quarter performance will change depending on the market conditions. Whereas a retail investor can take a more long-term view and they can say, okay, the market volatility over short term is fine, but a professional investor does not have that luxury because if returns are volatile, their investors might withdraw funds and go somewhere else. Whereas a retail investor has an advantage from that perspective because they can take advantage of the volatility.